There's a moment in trading that feels worse than losing money. It's when you sell a stock, and 10 seconds later, it explodes without you. If you've traded long enough, you know exactly what I'm talking about. And the worst part is, most traders make the exact same mistake right after it happens. I've done it. And if you've been trading for any amount of time, you probably have too. It usually starts the same way. You spend the entire morning watching charts, waiting. Most stocks are doing nothing. Some already made their move before you even had a chance to get in. So you sit there staring at the screen, scanning chart after chart, waiting for something that actually looks good. Then finally, one chart starts standing out. The price is tightening up. Volume is starting to increase. Momentum is building. It looks like the stock is getting ready to move. Your attention locks in. Now you're watching every candle, every tick, because you know this could be the trade you've been waiting for. Then suddenly it happens. The breakout. The price pushes through resistance and momentum starts building. This is it. Your heart rate jumps just a little as you click the buy button. Your order fills. Immediately your eyes jump to your P&L. For a moment, nothing happens. Then the price ticks up. 5 cents, 10 cents, 15 cents. Your position turns green. And in that moment, everything feels great. You were patient. You waited for the setup. You executed the trade. This is exactly how trading is supposed to work. But then the market does something that almost every trader struggles with. The price hesitates. Maybe just for a moment. Maybe a small red candle appears. Nothing dramatic, nothing unusual. But suddenly your brain starts doing something dangerous. It starts imagining the worst possible scenario. What if this drops? What if the breakout fails? What if this turns into a loss? Your eyes go back to your P and L. You're still green. But now the fear starts creeping in. I should probably just take the profit. Better safe than sorry. So you sell. Your position closes. You lock in the gain. Maybe it was $40, maybe $80, maybe $120. And at first, it actually feels good. You tell yourself you were disciplined. You protected your capital. You didn't let a winning trade turn into a losing trade. But then something starts happening on the chart. The stock begins moving again. Slowly at first. The price creeps back toward the high. You lean forward in your chair. Okay, maybe it stalls here. But it doesn't. The stock breaks the high again, and suddenly momentum explodes. Green candle, another green candle. Volume pouring in. Now the move you were hoping for is happening. Except you're not in the trade anymore. You just sit there watching. 10 cents higher, 20 cents higher, 40 cents higher, maybe even a full dollar higher. And this is when the emotional spiral begins. Because your brain starts doing something traders absolutely hate. It starts calculating what could have been. If I had just held, that would have been another $200, another $500, maybe even $1,000. Suddenly your small win feels like a huge mistake. And that frustration hits hard. Why did I sell? The setup was strong. The volume was there. The breakout was working. Why didn't I just trust the trade? I remember a trade where this exact thing happened to me. Everything about the setup looked perfect. Low float stock, strong news catalyst, huge volume coming in. Exactly the kind of trade I look for. I got in right as the stock broke through resistance. Within seconds, the trade started working. My position went green almost immediately. But then the price paused for just a moment. Nothing major, just a tiny pullback. But that tiny pullback triggered something in my mind. Fear. I started thinking about the trade failing. I started thinking about the profit disappearing. So I sold. I locked in a small gain and told myself I made the smart decision. But then the stock exploded. It didn't just keep going. It absolutely ripped higher. I watched it run nearly a full dollar after I sold. And I remember sitting there staring at the chart thinking the same thing so many traders think in that moment. Why didn't I just hold? That moment is incredibly frustrating because technically you didn't lose money. But emotionally, it feels like you did. Sometimes missing the move feels worse than taking a loss because in your mind, you were right. The setup worked. The breakout worked. The trade did exactly what you expected. You just didn't stay in it. And that frustration can lead to one of the most dangerous habits in trading. Chasing. You see the stock still running. Your brain starts convincing you it's not too late. It's still going higher. I can still catch the move. So you jump back in. But this time, the setup isn't the same. This time the emotion is driving the decision, and almost every trader knows what happens next. Right after you buy, the stock pulls back, hard, momentum disappears. The candles that were green just moments ago suddenly turn red. Now the trade that originally gave you a small win turns into a loss, all because frustration took control. But over time, I realized something important. Selling too early isn't really the problem. The real problem is not having a plan for the trade. Because when you don't have a plan, your emotions make the decisions. Fear tells you to sell early. Frustration tells you to chase. And both of those emotions can destroy your consistency. So here are a few things that helped me stop selling too early. First, decide your exit plan before you even enter the trade. Know where your stop loss is. Know where you plan to take profits. When those decisions are made ahead of time, it removes a lot of pressure in the moment. Second, consider scaling out of your position instead of selling everything at once. For example, you might sell half your position to lock in profit and let the rest run. That way, you protect yourself while still giving the trade a chance to make a bigger move. And third, accept something that every experienced trader eventually learns. You will never capture the entire move. No trader does. Not consistently. Even the best traders sell too early sometimes. The goal isn't perfection. The goal is consistency. Because trading isn't about one trade, it's about hundreds and eventually thousands of trades. Some trades you'll exit too early, some trades you'll exit too late, and occasionally, you'll catch the move perfectly. But the traders who succeed aren't the ones who capture every dollar. They're the ones who manage their emotions, the ones who stay disciplined, the ones who keep showing up and making good decisions again and again. If you've ever sold a trade and then watched it run without you, drop a comment below and tell me about it. I promise you're not the only one. And if you enjoy videos about the real psychology of trading, the wins, the mistakes, and the lessons that actually make traders better, make sure you hit the like button and subscribe to the channel. Because this channel is all about becoming a better trader, one lesson at a time.